Hello, ladies and gents, what's up? Good day to everybody. Let's get into the swing of things. Today is not gonna be rushed like yesterday was. I apologize, yesterday was very rushed. I had to get to a session today. I'm a little bit more available to do this the right way. I really like doing these end of the day lives because we can actually see what happened and kind of project a little bit to tomorrow. Hey everybody, Lenny, Lucas, Lemieux, Leo, TCC. Afternoon. Good afternoon there, sir. I don't think I've seen you here before. Welcome, welcome. Johnny Lorilla. I am apologizing if I have butchered that, but hello, Johnny. Hello, hello. Joe, hello. Good to see you there. Pietro De Nicola. My God, you guys have the coolest names ever. Pietro De Nicola. I mean, you're sounding like a more of a modern assassin right there, but still quite an assassin name. Um, you guys have really cool names. Anyway, so hi everybody. Let's get into the swing of things. Quite impressive, quite an impressive day. We have said we still see some bullish momentum in the system that had to be purged somehow. So we'll have a little bit of more of a push, but this is phenomenal. I did say I am definitely rooting for the closure of that gap the other day. I was saying I believe that will get closed fairly shortly, and so we have, right, the gap I'm pointing out right here. And of course, I was also rooting for us to close that gap, the one that we've opened up right here between well, when we switched over, it was between the 30th of September and the 1st of October, right here. In between, we've made this little gap. So here it is. So we were rooting for it to get closed. Why? Because that was the final gap that we had, basically at all-time highs, and will allow us to actually have a clearer path, smoother price action, if you will, with no chores and no hesitations of, oh, we need to get rid of that hole that we have. On the other hand, those who are aware and understand what's going on really have been accumulating a big bunch of holes as we were going to the upside, where basically this entire limb, this limb, all along we are full with gaps, including some of the ones that were left prior to the ones that were closed throughout this process of going almost sideways for a while. Right now we have actually exceeded that range that we were stuck in for a while. Those who are attentive, familiar, know what I'm talking about. We were in somewhat over range right here. You can kind of see, although of course we slip out, that's normal. But the question is this a true bounce off, or are we going to get rejected back down and see the price action basically move lower, as I've been expecting and saying 555 and all that wonderful stuff. Hi there, hello Ken, welcome, welcome, welcome. So let's try and look at what the momentum is showing us. Remember, the deal here is not what we, no gut feelings. If you have a gut feeling, take it to the bathroom. Here we're going to talk about what the market truly presents, right? So the market currently is on an uptrend, very clear. Doesn't matter whether we're looking at the shorter term, whether we're talking about currently this one, or if we zoom out, we realize we've been doing that one. But remember, that's only on the 5 minutes. 5 minutes is not too indicative of anything. We can maybe read from this the following, several sets of candlesticks before the market closes. So at face value, it's more bearish, right? So this implies we're going to maybe try and retest that median of the larger trend right there. So potentially a drop out of that shorter term trend, testing potentially that 57.68 area. Of course, if it's not going to be straightforward down, again, 57.67-ish, so still within that vicinity, right? That's kind of what the current price action on the 5 minutes tells us, but as we know, this can be very, very rapid. Switch over. So let's look at something that is a little bit more objective, a little bit less zoomed in, because basically if you think about it, what we're seeing is because we're zoomed in so much so basically our focus inherently allows us to see what we are able to see. Otherwise, if we zoom out, we're going to see a little bit more, right? Here that we've closed all these wonderful gaps. We're emphasizing all the gaps. Wonderful. Now let's switch to 30 minutes. Let's see what the 30 minutes gives us. 30 minutes. And you know what? Maybe it's a good idea to try to retain some of these trends so you can see kind of how the transition from larger to smaller and what the real big picture is. Here, really, what I want to try and show you, I mean, you understand, you're saying, well, Greg, why are these ranges so far out? The fact of the matter that most of the price action that is currently taking place is taking place around the median of it all, right? You can actually see we have a combination of two sets of linear regressions, right? Basically channels that have both, each of them have two lanes. Well, one of them you can consider it as the overbought lane, oversold. In reality, that's not really how it works. More so, it just simply splits it in two lanes. The bottom partition, which implies we're going to break to the downside. Top side implies we should break to the upside, but these rules are no longer applicable for many, many years. They can bounce off back and forth regardless. What is important to notice is that we've been retaining this trend for quite a while. If you want to be realistic about it, right, doesn't matter what happened here before, you can see it's a separate trend, right? It wasn't really at play prior to. Basically, that means there was a trend prior to, and we moved over, of course, to the trend we're currently having. So as you understand, these trends are not from here to forever, right? Judy, hello. Hello, Judy. And as you can also tell, oh my God, I think that's the straightest line I've ever drawn in my entire life. That's like, holy, boys and girls, end of the world is coming. I was able to draw straight lines. Oh my God. Oh my God, oh my God, oh my God. So, okay, jokes aside. Hello, Kay. Okay, good to see you. Good to see you, Kay. So, as you can tell, although we're attaining the trend very efficiently and still going back and forth, it doesn't mean we cannot protrude the supports and resistances, right? Those ceilings and floors, but we end up moving around the median. What it's all about is basically the average of that movement to the upside, and this is how we get our median, which is unceremoniously so. As you can see, we have an internal trend that is shorter duration, right? But you can see it as that one. You can see its existence. I'm going to try and maybe emphasize it so you can see, right? Let's make it a little, let's make it purple, maybe. Purple. No, that's not going to work for us. Yellow? Yeah, sure. Well, let's go with yellow. It sort of stands out. You can see there's another channel inside the channel. So basically, we are capable of working with the multitude of channels simultaneously. The fact of the matter, both of them are currently pointing to the upside, but you need to take in mind and consider the fact of the matter, the last time around we were on the top side, tested bottom, moved to the upside. We don't have to exceed, nor do we have to actually make it to the absolute extreme, especially if we're running down, if we're running out of momentum, and our trend, right, the curve is not retaining the steepness that it had, but in fact it's flattening. You can see the curve is basically taking this flatter approach and narrowing and flattening. Okay, now I'm going to remove some of the drawings. Oh, that was a bad idea. No, I want my yellow back. What happened? Okay, yeah, all right. So you can kind of see what the hell did I now remove, or remove the gaps. That was a bad idea. But I want you to be focused. Maybe I should have kept that one. Okay, yeah. You can see the prior smaller trend is a partition inside of the larger trend, which is within itself is a partition of the larger trend. Now you maybe, those of you who stay around and understand, this is why we focus back and forth and want to understand what it is, the big picture that we're looking at, and really where the trends are pointing towards, right? But we also consider momentum, because momentum is that thing that allows us to understand whether we are the same way. You need to understand the same way we ended up within this trend, and we don't hold these trends forever. As you can see, we basically move from trend to trend to trend over to kind of simplify things. That way, we cannot expect this trend within itself to be retained forever. And for us to break that trend and to move to the next one over, guess what we need to do? Break down. That's naturally how the market moves to the trend over, right? And this is, conveniently enough, that's actually something we're seeing in the indicator, right? So it's not that these ideas and principles do not work in line with what we actually are expecting from the technical analysis, right? So you see, as we know, we're already bearish, right? The red line dominant, meaning being on top, right? You can see in this instance where we had an upside rally, right? We had the green line, the K, it's called the K, this is the D. The K, if you ever hear me refer to it, is dominant. When the K is dominant, basically meaning we have an accumulation of bullish momentum, momentum of buying, an inflow, a quick inflow of money, right? So volume at a quick succession of time. That generates more interest, right? More interest generates more buying amplifies the effect, reaching overbought territory, meaning we're buying too quick, too much, hinting at a potential correction. Why? Because that's the natural flow of the market. Okay, I hope that makes sense to you guys and girls. So right now we're already in the procession of that correction, and we are expecting a further movement into oversold territory, which resides below the 20% retracement. Okay, and once we get to the 20%, we will amplify the same way we see amplified buying effect once we penetrate overbought territory, which is above 80%. Okay, and once we do get to 20% and below, the effect of selling amplifies. And thus the question becomes, how longer will we be staying in oversold territory, right? Or even if we'll have a corrective wave, will that corrective wave provide for the same, back coverage, if you will? If this provides us a correction of, I don't know, let's just say $200, right? Will that upside, this one, will it provide plus $200 for us? In reality, most people fail to understand that this works like a seismograph and reports the volatility and the direction. So it's a directional indicator, but really it cannot represent the full size or length of waves unless you zoom outwards. This is where we can see the actual wave, but then we get lost because the indicator is pointing towards something else potentially. You have to look at the larger time frames. Remember and understand what it is that the indicator is showing you as you expand outwards, and understand whether the indicator is indicating a flattening of the curve, or do you have still a lot of momentum to go to the upside, or completely the opposite, and it's trying to imply that you are basically running out of momentum and thus will drop. It's like a plane that is running out of fuel up in the air. And there, inherently, there's this force of gravity that will drop it downwards, right? Will attract it to the downside. Similarly so. Now let me try and clean all that stuff up so we can continue with the time frames. I hope that was helpful for those who are not regulars here. Those who are not regulars, Christoph, can you do me a huge favor and throw in our Discord link? I am a little busy. Join us on Discord, where we hang out, discuss these topics in depth, where people can sign up to my one-on-one academy, where I teach technical analysis in depth. And by the way, let me tell you that I've reopened a couple of spots, and now I'm already down to one spot. Just letting you know, it was immediately taken. Shout out to Leo, you goddamn legend. So pretty much immediately, I wasn't even able to consider how many spots I'm gonna open and all that, and he immediately came in and is like, oh, give me a spot. So now I'm down to one final spot. Hurry up, boys and girls, otherwise the academy again is gonna be locked soon for a while, simply because I'm running out of spots throughout the week to teach. I'm still human. Okay, so let's continue. So we're saying 30 minutes is rather bearish than bullish. We understand what our current supports and resistances are. Some of them are the gap created supports and resistances. More so, those of you who remember, we still have a gigantic gap to fill in right here. Okay, let me mark it up. It is here. Those of you can see there's a bit of a rectangle right here representing the gap we still need to close, right? We haven't closed that gap. The thing is, with that gap, we've sort of penetrated a little bit, and that's why it stopped. But really, as you can see, we have not yet closed it, right? This entire range is basically empty, right? We have not had full price action filling in that gap, and that's just the most recent one. Those who are aware, we of course have another leftover gap right here, and just you see that rectangle, that green rectangle behind the purple line that I just placed, and plenty of other ones as we go back, some of whom were closed, some of whom were still retained open. But as we're going to test downwards, we know these newer created gaps will play a role. They will be rather weaker, not in terms of not like weak time, but they will be weak, not strong. The opposite of strong. They will be basically easy to break through. They will show themselves. We will see them on the radar as we were going to be dropping down, but they will be rather weak, as we said. So with that in mind, let's continue to the larger time frames, because we need to understand that everything we see either gets amplified or shows the true nature of what we're seeing on a smaller time frames, because basically all that positivity or negativity will just play a smaller role within this larger time frame structure, right? So the further we go out, the more we're going to see actually what is the structure. Are we bearish or bullish? At face value, we're in overbought territory, which is amazing, because if those of you who've been following, I said we're probably going to break earlier, right? Scraping right here the 80 and correcting to the downside, creating more of an obvious downwards movement. Reality shows that even Greg can get it wrong sometimes, even if that by a little bit. But we did say we potentially might see the vicinity and see and test that wedge and see, of course, how the price action will play. Right now, we're already starting to see a breakdown of that momentum. It might not necessarily meaning that that's it, we're done and over and it's all moving downwards. It might be more of this prolonged process, right? It's not necessarily straightforward. It might take a little while, but we're moving towards that direction, if we will. Christoph, thank you very much. Boys and girls, those who are not regulars here, although it seems like we're mainly regulars here, Discord link in the chat. So this becomes a little bit more bearish. Now this, at face value, again, bullish for right now, meaning we can squeeze out just a little bit more, right? We can get just about that much what we spoke about when it comes to making that wedge, if you will, right? So that kind of plays, it actually plays well, right? This, what we're seeing on the indicator, what we're seeing in reality in terms of the price action, kind of go hand in hand. So it all makes sense. The question is, what happens afterwards? That's it. This does not imply from here on out to the moon. This implies, in fact, that we've been running hot for a while, and this is almost a secondary wave. If you're attentive, we haven't really got to be in oversold territory all that much, meaning this nature of this wave is far more bullish than bearish. Quite obvious, we can see it, but still we can see the flattening of the curve. We notice that it's no longer as steep as it was, right? In fact, if you're attentive and you look at this trend that was, right now what we're testing is what was floor, right now is ceiling for us. We almost kind of can see a hint to that, right? Basically market mechanics and how algorithms work when the prices get closer to its selling or buying, and simplified to go back to the level. Yes, correct. Yes. Then he has questions. I see. How are your queues looking? Loaded up. Yeah, actually bought more today. I bought 200 more. I'm at 2600 S triple Qs. I can show you later if you guys want, or just join me on Discord. I show it openly there. No problem. I bought more. My S triple Qs are like this. I mean, they're just the same way that they are for you. No, nothing all that special. Which, by the way, I bought some around these levels. I bought like at 722 or 26, something like that, I think. My average is now 11 something. I need to check to tell you exactly. Let me check that for a sec if you're really curious. We are losing focus on what I should be doing, but real quick, just for you. Real quick, just for you. 720. Whoa, I actually got it at 720. I didn't notice. I didn't wait. Or is that showing me? Hold on. My average is 1190, 2600 amount of holdings, and I bought at, where is it? Show me there. 720, 734. 734, 720? I'm not sure. It's sketchy right now. I need to go wait. Just to be 1000% sure. Is that, what date is this? No, that's not today. Where's mine today? Come on. That's an annoying thing in my system. It's kind of annoying, at least when you're live trying to figure out where everything is, back and forth. But I think it was 720, could be 720 flat, like we have what we have right now, or 720 something, basically. That's where I bought. Okay, I'm not gonna doodle with this right now. Let's refocus, otherwise people start dropping. Blah, blah, blah. Your overview on gold. Umar Abbas. I don't think I've seen you here before. Welcome, Umar. That's an interesting thing. We can take a look at gold, actually. I haven't done that in a while. My original prediction was when we were at 2000, I predicted to go to 24.5 ish. And I've recently taken a look, but look, it's not going to be straightforward. I'm giving you a heads up. But gold still has potential, and I see how it can get to 3,000. It's not going to be just a straight path upwards, right? In fact, I was talking about how there is a potential correction, a bit of a rally and a bit of a correction. I think the rally already began. I haven't checked last time. I think we were already on the move up quite well. 2600. Yeah, there's obviously a correction that's going to take place there, which I mentioned before as well. But my view of things is 3,000 in due time. Just kind of give you a heads up before we go there. So let's back to the S&P because we haven't finished today's duties. 1 hour. What is 1 hour? 1 hour right now at face value is more bullish, but we know this is very indicative of seeing more bearish momentum rather shortly, right? And remember, we're going to look at what we're saying on the larger time frames in a second, see what that sort of discloses. And well, this is more bullish, right? We're not being biased here. Although I have an SQQQ position, doesn't mean I'm not gonna be saying, oh, the market's gonna break this very second. Nah, none of that crap. You guys know we are objective of what we see at face value. This is bullish, in fact, very strongly so. We can see the curve is very, the indicator is very steep, pointing to the upside very rapidly. Not one of those slow slopes, right? None of this stuff. We're getting here a rapid rally, so all nice and dandy. I think it might be too complex to explain, but is there a reason why they are programmed to close gaps? Danny, that's a wonderful question, Danny. Some of them are actually programmed to close gaps. Some of them are more of an outcome of a subset of different rules that end up saying that the bots need to close the gap. They're magnetized to them, but more so you need to understand that the bots don't really think nor have emotions about things, and they've been taught to trade or perceive the market potential movement based upon our behavior. And we, the people, the human beings, back in the day used to close gaps. Why? Because we're stupid like that. It's part of the human emotions, part of the imprint of the human behavior on the bots of nowadays, if you will. It's not that complex, but at the same time, if you really start digging deep, you can end up really deep on that discussion, like to why something really happens. Mamatsav Greg, Black Mamba, good. Now that's the way. Now, boys and girls, learn Black Mamba here. Hit the nail on the head. That's the way we oftentimes say hello to each other. How's it going, brother? Kind of, or how's it going? Whatever name, nice one, Mamba. Very good, very good. Mamatsav is good, not bad. Obviously, a lot better. As you can see, you can hear my mood has improved significantly. So things have been a lot more quiet here. I'm feeling a lot better. So I can't complain. A lot better with regards to everything. So thank you for asking, Mamba. I appreciate it. I hope you're doing well as well. Wait, boys and girls, slow it down 1 second. Let me finish the stuff here so we can get to the to the chat and hanging out and all that. But for right now, again, the 4 hourly, which we know is very much related to the daily, is bullish. At face value, it's bullish and strong. So we know currently us residing right here on this median support. We know there's a potential resistance, or at least potentially I forecast there to be one for the time being, because we haven't really tested it, right? At 58.09. We also forecast potentially that we're going to have flat 5,800, right? We're probably going to have a psychological level right there, give or take. I'm sorry for being slightly off on a couple of cents there. So we're probably going to have a bit of a range right there, this kind of thing. So this is our current movement based upon the 4 hourly. But let's continue in advance. Let's look at the daily. The daily does not argue nor contradict the 4 hourly, so let's call it in agreement. So technically what we saw on the 4 hourly sees confirmation based upon the daily. It is a bit suspicious how it's starting to curve to the side here instead of being steep, right? But for now, it's nothing other than being a little bit suspicious, right? Nothing but being a little bit suspicious. On the monthly, though, what we're seeing is a little bit different, right? When we're starting to look at the monthly, we've been building up the structure, and we actually, the weekly, sorry, monthly. The weekly, we're seeing something that's a little bit suspicious. We've been sort of building up this momentum to what seemed as if we're going to have a proper bullish wave, but as you can tell, it seems almost to be starting to break down, right? It almost curves down to the downside. And that gives way to what I told you. A lot of the times, most people will not realize, because this tool is not built to show you the actual wave, it's more showing you the current impulses, and if you're not attentive, you're going to miss out on where these transitions of these waves happen and what the actual representation of the impulse and what the representation of the wave is. So the suspicion here is this is a part of the bigger, larger, as we said, structure wave, and just an impulse, and will soon fail, bring itself to the downside. Still, we have to be objective at what we see. At face value, it's bullish. It is bullish right now. Yes, we are seeing here some, we're smelling a little bit hints of crossover between the bullish and the bearish momentum, or rather the loss of the bullish momentum, hence giving way to the bearish momentum, right? To being sold conditions. And but at face value, it's still bullish. Let's see it for what it is. With regards to bullishness, we know what we're expecting, what are the current ranges. Again, we're at that 79, we're testing that 5,800 that we spoke about originally. But the real thing here, and those who've been around know, the problem really stems from the monthly, because the monthly have been cooking for a long time and getting ready to break down. Right now, again, we're doing this. It's very, very tame, very, very slow, as we are residing in overbought territory. And because we're on the monthly chart, these processes take a long time. We now have, again, 22 days and 1 hour for the end of this month. And I am suspecting, my suspicion, based upon what we're seeing on the chart, on the momentum right here on the monthly chart, this month will not close the same way it opened. But this is just a suspicion at this point. What we do know for almost certain is that this is going to overturn soon. When it does overturn, we know what happens. We usually have a correction. An example comes through this. Once we have this overturning effect, here it is, we have a correction. These corrections can be deeper than people realize, or longer, if you will. If you really want to be objective, again, from peak to trough, this thing was, am I doing it right or am I not doing it right? I can barely see it because of all the boxes. Okay, peak to trough, it would have been, say, almost 6%, right? But that's just this one smaller correction. Larger corrections can be deeper. For example, you can seek peak to trough right here, just to be sure that I'm doing the right thing. We're looking here at almost 11%, right? So you see, these can be actually larger. Who's to know that right now we're not completely overturning? If these were just smaller corrections, and this one will be the big one, right? The movement to the downside. So Greg, why do you think it's going to do that? Because it does. Because that's how the market works consistently. You can like it, dislike it, agree, disagree. That's what the market does, right? The question is how soon and how steep is it going to be? That's it. That's kind of the larger picture. Right now, we have no reason to look at the 3 months because we haven't stapled yet, haven't crossed over yet, nothing really readjusted. As you can imagine, if the monthly is very slow to show effects, the 3 months is even slower, although we finally just closed the quarter. So we're finally closing, we're moving to make this new candlestick. This new candlestick will give us an idea of whether this is actually a representation of a movement downside, as I'm suspecting, or is this actually going to end up by giving it more momentum, squeezing more. What's going to be the real trick about this? The reason we think that this is going to be the case is because, remember, this is a shrinked version of this, right? The 3 months of the 6 months. But the real scary story is that the correction has already begun. Some are just not aware of it, or on purpose pretending they don't see it nor understand that this is what's coming. Yes, a correction has already started. The full effects are not visible to you. Why? Learn technical analysis, you'll understand why this tool is not the perfect tool to look at these time frames and understand. But still, it is not lying to you. People will say, oh no, the tool is broken, there's a discrepancy. You tell me, does the measuring tape show you incorrect information? No, you may be measuring incorrectly. That can happen. The measuring tape is not wrong. Remember that. Don't be biased. Don't put your own I feel like into the equation. All right. Let's see what's going on. Let me just remove some. Some dirt. Right. Well, Rory, let's go back to the chat. Christoph, thank you for being a huge help today. I appreciate it. As you can see, Mama is a little bit busy today. She usually does all these things. She's a tremendous help to me. Sadly, she's probably busy today, so she can't even be on the live. Mama, shout out to you. You're a true legend. I love you a lot. You're an amazing student and an amazing help to me. Much love to you. Make sure to like, smash, subscribe, and all that great stuff. Christoph, thank you very much again. Yeah, I was just saying, like, subscribe, ring the bell, all that great stuff. Unless you have already done that, thank you. So, well, shall have some cash to DCA soon. Leah, having cash to DCA is always a good idea. Yes. Hello, Leah, by the way. Yes. It is always a good idea to have cash to DCA, especially at times when the market is at all-time highs. That is often, pardon me, give me a second. I feel like I need to clear my throat. Thank you. So, yes, it is always a good idea to have dry powder, so to speak, to be ready to DCA. But also don't rush into it. Don't see the market drop $5 and say, oh, that's it. No, time to DCA. This is why technical analysis are so great. There's just the other day, Tom and I were saying they fill in exactly that gap of understanding. You don't have to execute. You don't have to be selling all your portfolio. You don't have to be running around like a madman. But what you can do is you can use these tools to measure the current market, understand what the potentials are, be safer, be more tame, be less risk averse, more risk averse, sorry, be more, have a plan B, if you will, right? Make sure you have your stop losses, take profits in place if you feel like things might, hit the fan. Make sure that if you're at this point, you're probably so high on everything that, think about it, just a week ago you would have been ready to sell if shit hit the fan, right? So right now I'm pretty sure that if you look back and you'll find that level on which you were actually below a week and a half ago or a month. Again, don't put it too tight, because then the market simply by its regular volatility and fluctuations of up and down, or just some nonsensical event might throw you out. Don't do that, but put it at an acceptable price, something you would be willing to. If the market right now drops 50% and suddenly you have to either force yourself to get out of at what you will actually perceive as a loss, right? Because on paper you are looking at an ROI of, I don't know, 300%, and now you're back to 150. You would see that as a loss. paper or not, it doesn't matter. So it's going to be a wise idea, instead of finding yourself at 150% loss of your existent ROI, why not set it as such that at 50% loss, or 150, so that will be your 50. So that, let's say, if that's the equivalent of your 50, put it at I don't know, 25%, right? 20%. Adjusted, of course. I hope you're following, based upon what is your ROI and based upon what your actual returns are. Not returns, your initial investment are, sorry. And of course, the stock price. So there are various ways you can approach it, but you can fortify yourself from a loss. That's not that complicated, really. Monthly mounting cash. Yes, I mean, I do that. I make sure to have cash on hand to buy. Not always it plays out. Sometimes yes, sometimes better. Life is life. Don't feel bad if you. But yeah, it's always a good thing to be able to set aside a certain amount that you will be able, some dry powder for just in case. Yes, absolutely. Yes, 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 yes. Look, you don't have to. It doesn't have to happen overnight. You can accumulate that, right? Once you've accumulated a decent amount, see if you can maybe start using up some of that on assets that are currently being on 52-week low, or whichever approach you have, or if you again do technical analysis and you recognize that's being a good spot. Personally, a range from 10 to 25% cash is not the worst, especially when you can park it in bonds and get some yield. Generally speaking, yes, but yeah, I mean, sure, correct. It's advisable to have always some yeah, absolutely, yeah, that's why. Very correct. Do you have a sell plan for SQQQ? SC asks. Of course I do have. It has nothing to do with how your plan should be like, because we haven't really seen it rally yet. But when it will, we will be able to then recognize the potential of the highs, which of course I do have a certain expectation, but I would not judge based upon where we're at right now. Let it first begin properly, and then we can assess how high am I going to sell. You're kind of rushing ahead of the car. You're running ahead of the car right here with that one. But sure, of course I have an exit strategy, and that is for far out from where we are right now, so don't worry. We're going to talk about it as well eventually. Essie, I hope we have you on the Discord where we hang out and I openly explain more openly what the plan is for the future. Did you cover Palantir today? Rock so strong. No, I have not covered Palantir today. I've spoken about them yesterday. Nothing really changed. We still are aware that we have that 45 very strong resistance that was generated by the previous cycle, right, during days. Come on, that's just taking forever. Let me just have an easier time, right? Wink, wink, right? These all-time highs, which I'm going to be completely objective about this, and I have said originally, and I said this yesterday in yesterday's live, originally, if you look far enough, I've predicted that we're going to have an entanglement in that level, in these levels, as we had. But this is very short term. I predicted this entanglement to be far longer, in fact, longer than the previous one. And I said, yes, potentially the market is planning to have this head and shoulders structure, right? You can follow up on our Zoom calls, and I've said this before. I said this is going to be the thing that we're going to see here, right? If you really insist. It's kind of debatable here. Very debatable. Where was the shoulder? Where you're going to place it, right? But let's say that was the shoulder, just for the sake of simplicity, which, let me see. How does it structure? Yeah, no, I remember correctly. It's should have been like this. But anyway, it doesn't matter. You get the idea. You get the point. So, as I suspected originally, let me just, in fact, let's make it simpler for everyone. Originally suspected we're going to have a formation of a head and shoulders, but I also said, right, and I'm going to be tremendously open and transparent about this. I said that I don't think we're going to be able to complete this. I said we're probably going to fail somewhere along the lines of, because I expected the indices to fail earlier than the highs that we got to, looking at the S&P, for example. And I said, so look, I said we can get to the highs that we are at right now. But I also said that the likelihood of it is basically, in my book, 0 to none. So yes, you can call that a fail. I get things wrong sometimes as well. I expected this to be actually a whole step backwards. Things happen. Does it change the overall structure? No, it just goes to show exactly that same phrase that we've been repeating on and on and on. The market can be rational longer than we can stay solvent. So oftentimes you don't throw the whole plan or just go bananas because the plan did not work out perfectly as you expected. This is why we don't time the market, but rather locate strong support resistances, loss of momentum, and such tools to understand how the market really works. Ooh, what is going on here? Have been overbought sometime. Do corrections start suddenly, or do they snowball off the back of the negative event shock? It varies. Danny, sometimes this, sometimes that. It varies. It can be both. Sometimes the effect that starts it all can be some event, some story, something, and sometimes it's just the technical start overburdening, and then another, and something happens. The tiniest. It's like when you're hurt, the tiniest thing will hurt you even further, right? It's like, it's like getting, hitting your finger on something in the cold. It hurts that much more, right? There's that kind of example. So wait, where was I? We were Palantir, I think, and I just went bonkers because of you. So we're doing Palantir. So the thing is, this is not abnormal, but because, and more so now because Palantir is tied in with the S&P, and in a way, I was saying this is going to be worse. Actually, actively right now, for those who execute on this and actually know how to benefit and are certain that there will be a correction, because if there will be not a correction and you're selling here right now, the market will explode to 65, 7 and all sorts of levels right here, right? You're going to miss out. So what is the real thing, correct thing to do? More so we know we haven't really penetrated 45, which is currently our resistance. That last time when we've been there, we broke down very, very badly, right? That was the actual correction. But that also was predicated on the overall market. So if we're saying, oh, well, this is predicated on the overall market, what? It's suddenly it became irrelevant? No, in fact, it's even worse. Now the market has a lot more weight and effect on this. So if the market breaks, guess what? It's like a tsunami. There's no way you can prevent a tsunami with a bucket of water, okay? That's not how it's going to work. You cannot outfight a fire with a match. So actually, this is very impressive. I'm going to say, I thought we are going to break part way. We're never going to get this high. And I was wrong on this. There you go. But this is not it's not sustainable, and this is their way of getting out, because they know what's coming and they're allowing themselves to sell at higher prices. That's my perception on things. Those who know. I understand the overall correction process takes substantial time, but just talking about the onset. I see. Again, you cannot know. At this instance, I said it could come from oil, from elevated energy prices that come from a geopolitical event oftentimes. So what are you going to blame? The geopolitical event or oil itself? Which one is it? You see what I mean? And in reality, when you're so deep and covered to your neck, right? If the building exploded because there was a massive amount of explosives in the building, does it matter which one exploded first? If all of it was due to explode anyways, nah, not really, no. Let me ask you this, Danny. Does the why or the catalyst will change your position or adjustments or stop losses or take profits? Will it? What value is there to the knowledge of what will be the catalyst? I often said I'm not sure. I have assumptions of what the catalyst could be, but in reality, it doesn't really matter in my book, especially in conditions as we are right now. There's a lot of falsehood about the financial economic condition of US and subsequently the rest of the world as well. And there's a lot of bullshit going on. I'm sorry, and we all are aware of the bullshit. And the question is, when is that bullshit going to be exposed? I'm afraid it's going to be exposed into Trump's administration. And even though Trump probably is the best solution to these problems, Trump is not a magician. It will still take time. Exactly TV. Now that is a cool name right there. Exactly. Yes, I like that. How small would you suggest in percent from 100%? What are we talking about? What exactly are we talking about? You have to be more specific with that question. Exactly. You should be more exact. Sorry. Something at the highest. Yeah. You don't want to go throw a lump sum into something. Exactly. Absolutely. Very correct, Christoph. More so, should be very attentive and very careful and think. Wait, exactly. TV asked the prior question. A beginner investor plan to start to DCA into QQQ starting next week. Is it a bad time to start investing? I don't know. Exactly TV. That is for you to choose. I'm just sorry. Nail previous message. Yeah, I'm looking at your previous. It's up for you to decide. I'm here. The shtick of this channel is us, you guys, looking at a random dude on the internet who worked in the industry as an account manager. What my perception is, and never officially as an analyst, although my level is definitely on an analyst level. Been so for a long time. That's why I made it to where I have. And that's just my own, just rambling of some dude on the internet. Just look at it as such, right? Look, the fact that you're a mechanic doesn't mean you always have the best solution, nor you know exactly everything is right. I'm just simply presenting technical analysis as as my perception sees it. You might as well say Greg is crazy and knows nothing of what he's talking about. It's all nonsense, and make your own decisions. But that's the whole idea here. It's just me presenting my own view of the technical analysis of the market, and you do you. Kind of thing. Yeah. Right. We were looking at Greg, you legend. Yes, that is what happens. I'm seeing weird moves in the option market now. Why now? Makes sense. It makes sense. I think. Love you, brother. Yes, thank you very much, and I love you much. I'll right back at you. A lot. Brother from another mother. Those who don't know, Christoph is one of our moderators, admins, whichever you want to call it. A great member, true friend, very wise person. A lot of other good stuff I can say about him. What am I eating? I'm eating ice. I'm chewing on ice from my drink. I'm not really eating anything. I'm just kind of chewing on ice. I have a horrible addiction of chewing on ice. How do you think I got half of my my dental issues? I treat my teeth as if they're made out of titanium. Turns out they're not. Apparently. Turns out. I thought they were. Yeah, no, I love chewing on ice. It's pretty awesome. I don't know. I love the cold. It doesn't really bother my mouth anymore. No advice, only hobby analysis. Leah, that was good. Leah, that was a good one. All right, I haven't had a good laugh in a while. That was a good one. Okay, yeah. No, you need to understand that even the best analysts in the world understand how statistics work. And if you understand how statistics work, you also understand that what's the probabilities of you being wrong. There's always a probability. And in general, how the market works, the inherent nature of the market can lead up to you being wrong while still being correct, in essence. It is just this insane world of understanding the complexity of the market and all the cogs and variables to it. Lucas, gold, yes, give me a sec. Yep, I have a bit of a crazy thing where I Definitely treat my teeth as if they're made out of titanium. I learned the lesson the hard way. It's a bad idea. Don't do that. Don't do that, kids. Christoph, don't let her. Well, I mean, again, if it's like if it's teeth that have not been replaced yet, sure, whatever, right? But as she grows older, don't. It's gonna cause problems. Just yeah, avoid that. Avoid that. That's not good. Not good. Not good. Not good stuff. I might be right, not just right now. It's more so that there is a standard deviation to everything in the market, and thus so the it's almost impossible to calculate what the standard deviation going to be in this individual case, and thus you almost calculate for a range if you do it right. This is why, and especially in abnormal, unstable economic conditions, or times of uncertainty, if you will. Where is that ice cube? Which ice cube, lol? Yeah, pretty much. I just get a whole glass of them. I mean, I just how I get my waters. Just I have this like juggy like thing that has Absolute says on it. Whenever you guys see me on the Zoom calls having a clear liquid in a gigantic glass that says Absolute, that's not vodka. It's just water. And the way I do it, I just fill it with ice to the brim and fill the spaces in between with water, and it just keeps on being just cold as I go. So that's a bit of an addiction of mine. Have to admit that one. So gold, we were saying gold, right? Gold. Look, I mean, I said gold. My perception is straightforward. I do think gold has a lot of upside, but it's not going to be straightforward. In general, the market is going to be very volatile, and gold and the market are not always adversely correlated. At times, they can move in tandem. It's not, again, if you if when I say 3K and you imagine it to just go like this, right? Then you're wrong. That's just not gonna happen. The market doesn't work this way. First of all, more so if we are objective right now, even on the 4 hour, you see, we're starting to see this breakdown of the momentum. In other words, what's far more likely to happen with gold, although gold now is actually finding its true application when it comes to quantum computing and all that, but it's not there yet. In that sense that, yeah, sure, we're still working on quantum computers, but how do we know we're actually going to need gold? Maybe later we're going to find out that there are other metals. I mean, for right now, we find the gold is the most efficient one. But as we're going to go forward, we might realize that there are other metals that could replace it. And more so, we don't know the actual scale of the need for gold for that application, right? So gold, although now having a true, actual, real application other than just put, shiny stuff on your ears, fingers, and neck, right? It actually has a lot of application. Nowadays, sciences, if it comes to space applications, applications to space exploration or vehicles and whatnot, nowadays we find that gold is far more valuable rather than just being an empty store of value, right? And I do foresee how gold will trace easily back to 2500. We'll have this sort of back and forth play in it, which we're already seeing some of the correction. Naturally, the market has a tendency to correct more. So I'm going to argue that far more likely what's going to happen is what was ceiling will become floor, retested to death. We're probably going to retest that level as well, right there. Fuck. That's annoying, but give or take like that. So 24 450, let's call it 2450 to 2550, right? There's kind of a range. I'm kind of exaggerating here. I really am eyeballing this one, but still, you get the idea. What was ceiling will become floor, and it's not going to be all that beautiful. It's not going to look all that picture perfect, all right? Remember, that's where academia fails very miserably, especially people who are not familiar with this industry. We might as well end up doing something more like this. It's going to be a rigorous, annoying process, and only then hit back up to back to these levels, and then subsequently retest some of these levels that we just broke through, and only then lead higher, right? Almost creating this inverted head and shoulder structure. So it's not straightforward. Overall positive, not straightforward. Gold is always a good thing to buy, but not paper gold, actual gold. No bullshit. All right? All right. Paper gold is like NFTs. Yeah. Great. Have to had. That means you need to run away. I believe. Have a great evening, folks. Danny, thank you for showing up and hanging around. You have a wonderful evening. See you in the next one. What do you think about CrowdStrike? CrowdStrike. We spoke about them. CRWD. They had a big mess up. They will still suffer for it for a long time, obviously. If again, remember we said CrowdStrike is in tandem with the market and got a head start when it comes to the correction. There is still some gaps to be filled in, as we know, so it's not all that surprising that the price action is moving as is, right? But I do foresee it fail at some point with the rest of the market, closing the gaps and allowing the market to move freely, retesting previous support. But as you can see, the idea that right now is the transition from this range to this range, and what will happen post this range is probably the next range, so that will happen soon. Right, as you can see, we don't just stay in these ranges forever. That's not how stuff works. Okay, so yeah. What are your current support resistances? Oh, we're familiar with them. We spoke about all of that stuff. If your current wave is, let's give you some Elliots to work with. You are, we know our majors are, I said this before, I think. It's 290 range, 280, right? So it's, call it 300 to 280. That's your main range. That's your most powerful range that is now currently sort of being tested, right? Let me just remove some of that crap. So you can see we're basically locked into this area. So we're starting to build a downwards trend, if you will, and you're gonna have this whole intersection testing you to death before you make it to this one. Right? Alright. Yeah. Why do we think that? Because it's highly related to the S&P, and we understand it's gonna be, it just started ahead. It just started ahead of time. And we haven't even hit oversold territory yet, which is most of the action starts. So there you go. CrowdStrike is done. Uncovered. Simple. CrowdStrike. Head and shoulders. Some form of shoulder. Head and shoulder. Head and shoulder. Some form of head and shoulder. Right there. Some shoulder. Oh. That's a part of the bigger drawing. It's kind of, I cannot draw to save my own life. Apparently. I have a big problem. Doctor, I cannot draw to save my own life. Head and shoulder. Zim. Judy, Zim is going to be affected by... Zim can surprise. Judy, join us on the Discord. I prefer to do... I don't want to do Zim. Zim is affected by so much stuff right now. I'm going to get lost just by explaining what Zim is correlated and related to, and Zim is problematic. There's a lot of issues with maritime shipping right now. It's a big deal right now. I wouldn't want to play Zim, and Zim is only good for the long-term hold. Eventually, Zim will be good. Right now, Zim is probably doing God knows what the hell is Zim doing. Even God doesn't know what Zim is doing. Zim is like, what's Zim doing? What is Zim doing? Yeah, scraping the bottom ish. Yeah. You're picking up, but still, you see, Zim, I think, is gonna have, it's gonna be a very sad story. Unlike Palantir, I don't think that's gonna be your scenario here. I think sadly Zim is gonna be more of a maybe not even. I've just ignore that. That just I went too far. It's more like a blah 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 blah. So yeah, if anything, maybe. And this is so far out. I would advise talking to me about them in about a year. Okay, that's just gonna be maybe or 2 or 5 or 8 or I don't know. Like eventually Zim will be fine. The curvature is gonna look more like this, but it's gonna take forever at this rate. Or unless Trump has fairy dust magic in his pocket and is gonna resolve all the problems of the world. Yeah, yeah. Yeah, I'm sorry. That's just it is what it is. Wait, Leah asked about Zim or who asked about Zim? Judy Zim. Sorry, Judy. Sorry, I apologize. It is what it is. I apologize, Judy. It's not great for you. Even if you're gonna squeeze out a little bit more here, you're gonna give it all back. All back. Yeah, here we don't even have data. What's the point? It's not great. Not great, Judy. Not great. Might be good opportunity then, I guess. What are we talking about, Leah? I feel a strong management, especially since summer they had pretty good. I guess might drop after earnings because it might show some drawdown of their cash. Yeah, could be. I'm assuming you're talking about CrowdStrike. Or I guess we said Zim. Head, shoulders, knees, toes. Sing with me. Leah, good one. Okay, Leah is here for the kill today. Good job, Leah. Good job. What toes? I lost my toes in Vietnam War. What are you talking about? I left my toes in war. No, I'm kidding. I'm just kidding. Knees, toes. Knees and toes. So many toes. So many toes. I need to leave, sadly. See you next time, and thank you for the nice input. I appreciate that, Inlia. You have a wonderful evening. And so I think I'm gonna drop off soon myself. I think we've kind of covered everything. There's not a lot that we have not covered in today's core. There's nothing all that surprising we haven't covered before. We are seeing a little bit more bullish momentum, but we know it's due to fail rather shortly. Pretty impressive, I gotta say, all across the board. We've been seeing, even Apple, SMCI is even sort of allowing itself to slightly recuperate a little bit of the downside that it had, right? So we're kind of everything is rather stable-ish until the next impulse of the market. So I do expect it soon. And we know why. We're seeing all the technicals. Remember, that's just my own expectation. You do you. This is not financial advice. But generally speaking, I'm glad that you guys joined me and here to allow me to ramble on my personal thoughts and meandering opinions on the market. I'm late. Hello and goodbye. Chobi, thank you for showing up. Yeah, we're about to adjourn this meeting, but thank you for showing up. Regardless, I appreciate it. Recommend you rewatch once we're done. And thank you all. Judy, my pleasure. I hope that helped. We would appreciate greatly. What are we talking about? When stream is ending, people please make sure to come back after and leave a comment to spread some love and Greg's algorithm rank. That is true. That is true. Christoph here is saying the truth. I would tremendously appreciate if you all boys and girls join in afterwards and just leave a comment or something, and don't forget to like, subscribe, ring the bell, all that great stuff, even if you watch afterwards. Love you all. I wish you all a wonderful evening, morning, afternoon, uh, chupacabra or whatever you have. And I'll see you on the next one. Peace out.